Saturday with a quick look at the week ahead and some thoughts for our trading plan going into Monday. As we talked about last week, the ES, we had this upper trend line that we tested on Thursday, and we were saying that this is a good area to possibly take a spider long, SPY, and we got a nice candle to the upside on Friday. Something that I noticed on the SPX as well as, or the cash as well as the ES, is this pattern that we're in. Okay, this sinuous pattern to the upside. Okay, we're currently stochastics. We're currently in very close to the overbought territory. But the thing that I wanted to point out was the tendency for us to trade off of the lower pivot 1, 2, 3, 4 to the upside, and then a downward candle 1, 2, 3, 4, 5 to the upside, and a downward trading pattern 1, 2, 3, 4, 5, 6 to the upside. Obviously, we have a hammer and a doji, and then we get selling for a week. Okay, 1, 2, 3, 4 to the upside, and we got selling. 1, 2, 3, 4 again to the upside, and then we got selling. Now we had the first candle up on Friday. Now, if we overlay the Fibonacci's, okay, we were saying this last candle here, that if we got above this area, actually it wasn't this candle, sorry. Over a week ago when we said we got above this 100% level here, that the 127 was a possible target. Okay, using that sinuous pattern and the repetition of 3 to 4 to 5 update candles, we've had our first one now. Okay, so we have these pivots down here, and then we have these pivots inside of this channel where we came down and tested this on Thursday. This descending pattern and this ascending pattern here, this lower trend line. So now we have the first up candle. Relative strength is heading down, but with these 5 down day or 3 down days, you would expect that to happen. Being this is a lagging indicator, we want to see this turn back up. We're still headed in the upward direction, and we're at the 51% level on the relative strength. So with this one candle on Friday, a very big day. If you look at the intraday, we finished very close to the highs of the day, and we created a big flag for the most part. We have the very high possibility of trading up to this 127 level now. Okay, we have these highs up here, this high here in May, very close to the 127 extension, so, and very close to the highs in April, March, April. So it's something you have to consider, that we have this pattern of 3 to 4 up days and some selling, 3 to 4 up days and some selling, 3 to 4 up days and some selling. That we've had our first candle now off of a pivot. Okay, so looking at this level here, I could see how it's very possible that we would get something up here as a reversal at the highs of March, April. This all reminds me of Oliver Les's book on swing trading tactics. Okay, pictures of greed. Okay, when we get 3 to 4 up days, you have to start thinking sell. Okay, and conversely, when you have 3 to 4 to 5 days of selling, you need to start thinking buy. Okay, you need to turn your thinking cap around and stop thinking, okay, well I got to sell here because now we're down to the lows and I can't take it anymore. You have to start looking at your trades from a contrarian point of view and look at these down days. Okay, now we've come to a point of pivot. We have some relative strength. You look at your stochastics. You start thinking about the possibilities of turning points. 1, 2, 3, 4. Okay, this last one where we hit here. Okay, we didn't get down to oversold, but now we were turning back up again on Friday. Okay, is it possible that we could continue higher or continue lower? sure, we could continue lower, but I'm looking at this pattern of 3 to 4 up days and some downside action. 3 or 4 up days, downside action. Okay. So not to repeat ad nauseum, but that's what I'm looking for going forward into the week. Now, looking at the dollar and Ted Burgess charts over on StockTwits, remember we talked about this last week, where we had the 83.65 level, this horizontal right here, which is figured on point and figure charts. Okay, this is not just some arbitrary number. These numbers go back. You can see 02, 03, 04. This is many years back in time that you have these levels where on a point and figure we reversed off of them. These have been support levels. 83.65 is right here. Okay, you have this upward trend that stopped, and then we moved down. We have this level here, and see that's December of 06 where we came down, and that was support in that area, and we moved higher. So 83.65 is an area that you have to be aware of. GTO mentions it many times in the room. We mentioned it last week where we briefly traded above. We hit the 84 level and we traded back down below the 20. We found support at the 50, and we said that if we didn't get back up to the 83.65, that you had to be aware that it's a possibility that we could fail and move down below the 50 period, which is what happened on Thursday and Friday. Okay, we tested on Thursday, but the bears were in control on Friday with the US dollar. All right, so next level, we could bang around in here for a while, but I'm looking at this level here. The green line is 81.26, and there's an intermediate level here at 82.62, which we could bang around for a while right near the 50 period. Okay, this is a 200 the 100 period moving higher, and these are all MAs, by the way. So this looks like a very interesting target. Be aware of that. So if the US dollar moves lower, that's good for equities. The fact that we're below the 50 period, going back to what I said earlier about the S&P, we have the possibility of a move higher to that 127 extension. Okay, so if we got up to the 127 extension, I would look for a possibility of a fade there. Okay, remember these patterns. Okay, you want to be thinking this way. If we get back up here, I'll definitely be thinking about putting on some puts. We had a little bit lower than average volume, very close to it, but we want to see a spike in volume on Monday or Tuesday to see capitulation from the shorts and a exhaustion in this up move. Remember the currency harvest fund, this is a reflection of the carry trade. You want to see this moving higher, and it's exactly what's been happening. We continue to move higher, although we had on Friday a gravestone candle. Okay, so this typically indicates a reversal. We'll see what happens on Monday. This is just one of many indicators that I follow. One of the other things I look at also is copper. You can see that we reversed on Friday off of this Thursday candle where we had a bottom previously. RSI is heading higher. We want to see this move through the 50% level. Okay, where stochastics were oversold. You want to see copper moving higher. It's just a forward-looking indicator for higher equity prices. Okay, TLT, we had some moves down last week, and then again on Thursday we had this somewhat of a doji candle, and then we had a drop or a gap down lower to the 50 period EMA, and we bounced. So you want to watch these Bollinger Bands to see if they expand upward, upper and lower, which would indicate that this momentum could continue down. Notice the RSI is moving down through the 50 period, 50% level, and we haven't hit oversold territory yet. And stochastics is pointed down. All right, we had a tremendous amount of volume on Friday, which Delta Strike and a few other people had pointed out. So keep an eye on TLT and your bonds. Let's take a look at MUB. See what the municipal bonds are doing. You can see that we've hit a high at 112 and 9 cents. Okay, stochastics is headed lower. It's pointing to lower prices. We could see it come down to the 20, perhaps come down, test, go through the 20, and test the 50 period EMA. Alright, there's a big cup, and it could be forming a handle right now, depending on what happens. Got MACD rolling over as well, so keep an eye on MUB. We can also take a look at the Russell, which has found support at the Kumo. Okay, we've nailed the Kumo numerous times. We've not broken down through it, and we're again bouncing on Friday with this descending channel. Okay, so we need to be aware of this pattern and the possibility of move higher, because descending channels tend to break out to the upside. We can see that we had a TK cross to the downside here above Kumo, which is a weak signal. So I would look for Tikin to gradually move back above Kijun this week and continue to move higher. So we're currently at the 382, and we touched the 50, or came very close to touching the 50, and we backed off of that. If the ES futures move higher as well as the S&P cash, I would expect to see at least the 618 and this high here on a retest. But I'm looking at this upper Bollinger Band as a possible target for the Russell 2000. Okay, I hope this helps. I'll probably, more than likely, post another video on Sunday with trades that I'm looking at going into Monday and Tuesday.